especially yesterday, of course, this new class of stock, the prefers. Put us up to date, if you would. Are you short? Are you still short AMC?
Well, I'm glad I'm doing this from an undisclosed location that may be ape-proof. So we actually just initiated an AMC short. We were short last year, covered. We just initiated a new position yesterday. However, and just calm down, apes. I'm actually an AMC security holder on the other side. We actually bought the new ape preferred, and we have shorted the AMC common against it. They are economically the same security. They are not freely convertible into each other, but they are economically the same security. And there seems to be a lot of confusion about that. The company can go out now and issue new preferred to finance itself or pay down debt or make acquisitions. But functionally, the two securities are the same. And I would guess the apes will be putting pressure on Mr. Aaron if the discount continues to make it freely convertible sooner rather than later. But you know, one's at 6 and one's at 10 or wherever they are right now. That spread is economically an arbitrage.
You think they should be the same price?
They should be. I think they should be the same price, or roughly the same price.
Why would you rather have the preferred versus the original share? Why is one better than the other? Or you're just counting on them to close? I'm
counting on them to close. Okay. In effect, that I think they'll ultimately all be the same class. I think that at the end of the day, the economic interest in ownership is one for one. There's a great frequently asked questions section on the AMC website that I would urge the apes and others to just read about what this security is. It's very clear. Adam Aaron has made it very clear. And in effect, all of the shares, both in the common and in the preferred, will share in the upside of the enterprise or downside of the enterprise. So they shouldn't be trading at you know, a 30% discount.
If you weren't a professional investor, if you were the CEO of AMC, wouldn't you say, like, if you were in that seat, he's playing with a really tough hand. It's a movie theater chain in a pandemic. Like, wouldn't you say he's pretty much done everything that one man could conceivably do to save this business? Like, even if you don't like the structure, et cetera, don't you feel like he's doing what he's supposed to be doing?
I literally, Jim, before you answer that, I was going to go there myself. I think it's a really good question that Josh poses, is that criticize him as much as anybody would like to do, and certainly he's endured a lot of criticism throughout the last couple of years. He's just taking advantage of an environment that has been put in front of him at the dinner table and taking full advantage of what any good steward of capital as a CEO would do in this environment.
I would agree with that up to a point. And because, again, he's doing it I believe at the expense of his shareholders. He's trying to save the corporation, and it's a really interesting governance question beyond, I think, the purview of our discussion today, of what do you do to save the corporation, even if it's on the backs of your shareholders who own the corporation. Number one. Number two, let's not forget, Mr. Aaron arrived here in January of 2016, and much of what got this company in trouble was his aggressive approach to the movie theater business from 2016 to 2019, taking on a lot of debt, making acquisitions in a business that was already declining. So, you know, he's putting out a lot of fires here, but a lot of those fires he helped set.
Well, as you said, you know, as long as his shareholders, apes or whoever, continue to bid this stock up in this particular environment, they are, in a sense, giving him the opportunity to, I hear you in suggesting that he's taking advantage of them, but they are giving him the opportunity to do such, if one believes that that's in fact what he's doing, by continuing to bid up the stock. Let me do this. Before I let you go, let me get your broad opinion on where we are in the market. We've talked many times about